Hi everyone, welcome to this week's market forecast for the week ending April 23rd, 2021. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the euro, the pound, the dollar yen, gold, and Bitcoin. So a lot of markets continue to move sideways. The pound looks like it may have broken out last week, and the euro closed above a key resistance area. Furthermore, gold closed above that double bottom neckline, so I'll show you what I'm looking for there to continue the rally this week. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the EURUSD, and you can see where the pair closed last week above that 119.50 area that I've been talking about now for the last week or so. All right, so you can see where this area right between 119.20 and 119.50 has served as resistance back here, resistance again on this candle, and then it flipped to support right through here. Now, once the pair closed below it, 119.50 became resistance. So with last week's close, we should be looking toward this area as support for the week ahead. However, if we move into the daily time frame, there are a couple of things that could prevent buyers from extending prices. And the first one is if we look at this recent price action. And, first of all, the pair has been really choppy lately. And as you can see from that weekly chart we just looked at, it has been moving in a range for quite some time. So that makes it a little bit trickier to trade. And looking at the daily, this one too is really just sideways. All right, so even though we have a downtrend, it's sideways here. And over the last few months, again, it is just sideways. All right, so you have to be careful trading a market like this. As I mentioned last week, if you are going to trade it, you may want to look for 50 pip or 100 pip targets versus trying to go for 200 or 300 pips. So looking at the daily here, there is a channel that extends off of some of these recent lows. All right, so you can see where it connects with several lows down here. And if we drag that level up, it intersects right with Friday's high, okay, or pretty close to it. So this could come into play this week, and that level comes in right around 120. All right, now furthermore, you can see based on some of these recent lows back here that the 120 area or just above it has also been key in the past. So 120.20, maybe 120.30, this area right through here is going to be critical for the EURUSD. And this is what I mean by this one is harder to trade right now, because even though we got a weekly close above 119.50, there's still some resistance that buyers have to get through. And that's just because the pair has been so sideways over the last few weeks. So if we do see a daily close above this area, that could extend prices up towards some of these recent highs, right around 121.50. Get above that and we could see 123.50. Although right now, again, like I said, I wouldn't be going for 200 or 300 pip targets. I would look for something more like 50 pip or 100 pips at most. Alternatively, if we do see the pair close the day back below this area, all right, that could continue this descending channel, and we could see the EURUSD rotate toward that 116.15 area. So I mentioned this descending channel last week on the pound, and you can see where the pair did find support right at that 136.70 level. All right, so I talked about this last week too, and this was really a confluence of support based on that horizontal level, a key trend line from May of last year, and also the bottom of this descending channel just below that area. So the pound appears to have closed just above this level, but I would like to see something more convincing this week for a daily close above that channel resistance. Now, if we do get that and we get a continuation to the upside, the next key resistance is going to be up around 140. You can see how that served as resistance back here. And above that, we have the area between 141.50 and the top up here around 142.30. Now, alternatively, if this didn't break out and we see the pair rotate lower, or we get a false break, 136.70, this area is of course going to be support, with a close below that exposing the 134.50 area, which also lines up with the bottom of that descending channel. So similar to the EURUSD, although not quite to the same extent, this pair is pretty sideways recently. We do have a nice uptrend though that's been in place over the last few months, so that's something to play off of, but we do need a convincing break of this consolidation in order to look for long opportunities up toward 140 and perhaps that area between 141.50 and 142.30. Next is the dollar yen, and I've talked about this trend line that extends from the 2015 high a few times now. So you can see these two highs up here. that's where the trend line starts. It connects with this high just before the March crash of last year. And we did get a breakout on the weekly time frame above that level. And if you look at the daily, you can see exactly where that level came in. At least this is the one we were watching before. And it does appear the pair has closed back below that level on a daily and weekly closing basis. However, this is where the subjectiveness of trading comes in, because if we look at the weekly and move this level down just a bit to connect more with the closing and opening prices on these weekly candles, you can see that it's still holding above that area. All right. In fact, if I move it down, you can see where this placement could be correct as well, because notice this weekly high and then this low and also this one. All right. So if we move it down here, you can see where the pair is still technically holding above support. So here's how I would play this. If we look at the 4-hour time frame, all right, there's actually a trend line that extends from some of these recent lows and also connects with that second placement that I just mentioned. All right, so based on some of these recent lows down here, you can see that we have this low as the starting point. We have this touch, this one came pretty close, and this one here. So this is a pretty well-worn trend line. And if we move it up, you can see that it does connect with that multi-year trend line from the 2015 high. So I would keep a very close eye on this 108 area. If we don't see bullish price action from here, such as a pin bar, okay, in this area, and instead we see a move below it in a daily close below the 108 region, that could expose the next key support around 106.60. And looking at the weekly time frame, you can see why 106.60 is a factor. If you look back here, notice how it was support through this area. The pair then closed below it, and 106.60 became resistance. All right, so going forward, the 108 area is going to be support. If we see a daily close below that, it would expose 106.60. Alternatively, bullish price action from this area could send the dollar yen up toward this recent high and perhaps up toward the 2020 high near 112.20. Next up is gold, and I've talked about this double bottom a couple of times recently. You can see right off of the 1680 area, which was a key support level based on the price action over the last year, and it's also a key fib level. So you can see where back here it was resistance, then flipped to support. Now it's also a key fib level based on the 2020 range. So this low down here, and then also this high up here, you can see where the 618 fib right back here lines up pretty close to that 1680 area. And furthermore, you can see where the 50% retracement also lines up with this 1760 region. All right, so this is the area that the pair had to break above in order to confirm this double bottom. And it did that on Friday. In fact, it looks like it may have done it on Thursday, and Friday found support right around 1760. So going forward, gold needs to hold above 1760 on a daily closing basis in order to remain constructive and also continue to target the 1830 area. You will have noticed that this was also a key fib level based on the 2020 range. All right, so that's going to be the target also for the double bottom and lines up pretty close to that descending channel that's been intact ever since the 2075 high. So we'll see where gold goes in the week ahead, but again, as long as it's above 1760 on a daily closing basis, I like the idea of a run up toward 1830. The market would then have to close above this region in order to expose higher levels, including 1960. But we would need a daily close above this area right around 1850 in order to confirm the breakout. Alternatively, if we see gold rotate lower and close the day back below 1760, that would be a bearish development and could expose the 1680 support area. And last but not least is Bitcoin. And I have to be honest, looking at the daily time frame going back over the last 6 or 8 months, the price action doesn't look great. Yes, it's still in an uptrend. The pair is still technically carving these higher lows and also higher highs. Okay, but you'll notice that it has really lost its momentum that we had back here and also through this area. All right, so this was a nice healthy rally. We got a retracement, correction through this area, and then another rally. But since this time right here, since this correction, Bitcoin has lost a lot of that bullish momentum, and it's also leaning on a key trend line. So if you'll notice back here, going back to the December breakout, all right, this was the previous all-time high for Bitcoin, right around $20,000. It broke out here in December, and ever since this low, this pullback right after the breakout, you can see there's a trend line that extends up, and it seems that Bitcoin is resting pretty close to that level right now. So this $60,000 area could be a lot more critical than people realize. And you can see that 60,000 was also resistance over the last few weeks. All right, Bitcoin had a lot of trouble getting above 60,000, and it did that last week. But the question now is, can Bitcoin hold above this area and move higher and take out some of these trend lines? Because you'll notice too that this is an equidistant channel right here. So this level up here is parallel to this one, this trend line. And Bitcoin has failed to move up and retest the top of this level. It's also failed so far to retest the top of this level. And right now there's another trend line off of these highs. So it's like I've said, it just seems like the momentum here is waning, and it just depends on what happens around $60,000. I don't want this to sound overly bearish because I'm not bearish overall on the crypto market. I still think that we have another 5 or 6 months left in this bull market. But the question is, where do we go over the next few weeks? Do we break below 60,000 and see a bigger correction? Or can Bitcoin take out some of these trend lines and start to move higher? So if we look at the 4-hour chart, here's what I'm watching right now. You can see that we have an ascending channel with the support coming in just below that 60,000 region. Now, Bitcoin did break below a trendline support last week on this sell-off. So it really comes down to this. Can Bitcoin move off of the 60,000 support, move higher and take out this area right around 63,800 to 64,800? So basically close the day above 65 and start to take out some of those trend lines that I just mentioned. That could take Bitcoin up to the $70,000 area. Or do we get a daily close back below 60,000? Perhaps as low as the $59,000 level. If we were to see a daily close down here, that could be bearish in the short term and open up some of these lows, including that $54,000 area, which is the CME gap from a few weeks ago. So all in all, over the long term, Bitcoin still is in an uptrend. I still think we have another 5 or 6 months left in this crypto bull market, but the short term is a little bit harder to determine just because Bitcoin is leaning right on that $60,000 level, and it has lost some of that bullish momentum over the last few months. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.